Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
This is the Investing Podcast, April 5th, 2017. I'm Andrew Hall. Joining me today, Sam Frost.
What's up, man?
Ben Nye. How's it going? Doing good, man. Doing good. Let's just jump right into the topic at hand, Panera. Sam is kind of our resident Panera expert here at Tusk Media and Narwhal Capital. Full disclosure, we do own Panera. I think Sam even owns some in his personal account. So I think that'll be in the description of this video and all that good stuff. But let's rewind a little bit to not this past quarter, but a quarter before when we really started to look at Panera, Sam, and talk to me a little bit about what caught your eye, how it showed up, and what attracted you to this stock as a potential investment.
Right. So after the third quarter, Panera's share price got hit kind of hard. They came out, the fast casual restaurant chain was kind of struggling a little bit, and they thought that there were headwinds in that industry. And then Panera comes out with their earnings, and they beat on all cylinders, but their average or the number of transactions decreased, and so Wall Street was like, oh, they're facing the headwinds too. People aren't going out to eat anymore. They're done. And so they just got hammered. And then, but the thing was, like, it actually played right into their thesis, into what Panera was trying to do. They said, yeah, our number of transactions are going to go down, but our check size is going to go larger through what they called Panera 2.0. And so Panera 2.0 basically facilitated their operations in their stores. It went from just mad chaos to ordering, then mad chaos trying to pick up your food, and mad chaos trying to figure out where to sit down. And they basically said, now you can order online. You can just go pick it up at the store and leave. You can order and pay. You never have to talk to a person. You can order at a kiosk, or you can order with an old school cashier, and then you sit down, they'll bring you your food. And so they've really facilitated it so that people can order like as an office or in larger groups, or for your whole family or something, go pick it up. And so so it's just playing like right into their story, but yet they got sold off, and it's kind of, well, if we believe in management, like, they're right where they said they were gonna be, and it looks like they're gonna continue. And the final thing was that the third quarter was a huge quarter for Panera 2.0 upgrades, and they've come out and said that it takes about 4 quarters to see the margin expansion and the increased same-store sales and everything. And they had a huge quarter of upgrades in the third quarter, and they were finishing up in the fourth quarter. So it was like, all right, well, by Q3 of 2017, we're going to be seeing the bulk of all these synergies from the upgrades. And, you know, it looks like their share price is just set to just rally.
And one of the big things, so you always want to like fact check management and things like that when you look at a company who's professing to make these claims that just wait to see what happens in 2.0. But one of the big things that stuck out to us was that we did analysis on the average revenue for a Panera-owned store, which had been going through these changes, versus the franchises which hadn't gone through these changes yet. And so when you are looking and wanting to believe management, it's really important that you also, you know, fact check management, make sure they're actually being honest with you, because you can't just always take their word for it. And so that's how we helped to create this variant perception that we had here.
Right.
Yeah, I think it was one of those things that was kind of a unique opportunity, I would say, on a couple fronts for us. Number one, we don't play a whole lot in the restaurant space. It's hard to find value, we feel like, a lot of times in those places. The other thing that was interesting was, you know, the narrative and the story of Panera 2.0 is one that's, I would say, relatively obvious and logical given where we are in, I guess, the rotation of how business is done. We're moving more and more towards mobile apps, towards, you know, quicker, more efficient, less human-reliant ways of doing just about everything. So it seemed like a pretty obvious story that the street would recognize, and yet there was a huge disconnect.
Right, and it was kind of shocking to me to see that there was so much talk about Panera doing this, because originally I was like, they're just now getting there? Like, it seems like they're way behind, but apparently they're kind of like the first movers in this 2.0 world.
Yeah, and I think it's, I mean, even just on a macro level, or I guess maybe this is actually the opposite of a macro level, a really micro level. You know, for us, we're not huge Panera fans in terms of eating there. I know Ben and I tried to pull off at an exit to get coffee at a Panera not long ago when we were on a road trip, because we wanted to do it and we couldn't find the store. So I don't know what that says about our navigating abilities and what it says about Panera. But the point being, you know, we're, I guess, a small to mid-sized office, 10, 11, 12 people here every day. We order lunch in most days. the idea of ordering from a mobile app, you know, it's kind of like what we do with Uber Eats or whatever it may be, is actually pretty attractive, and we almost put Panera, that type of restaurant, into the rotation. Now, Panera didn't make it because we eat way too much, but it was kind of an interesting story. So we started to kind of nibble at Panera, started to get into it as an investment position. Talk a little bit about, you know, price targets and kind of how it evolved over that quarter and into the most recent quarter of earnings.
Right. So it's kind of funny because we came up with a price target. I think I pitched this around like 210. It was around $210 a share, and I was like, price target. I think it should be worth about 252. And I honestly felt like I was stretching a little bit. Like I relied on you guys to like help pull my numbers up a little bit, but then like they came out with their earnings. They came out and said Panera 2.0 crushed it. And then they said delivery. That's our next step. We've been rolling it out. We think this is going to be even better than Panera 2.0.
3.0.
So, yeah. So the market just loved it, and so they went up. I think like 8% of the day that they reported earnings, and they've just been ticking up ever since. And I don't know how much of that was maybe just insiders leaking information or kind of thinking that this is a possibility that an acquisition's on the table. But yeah, so we got, like, me and Ben were laughing because we got to 252 and we're both like, should we sell now or what do we do? It just seems to keep running.
I sold it at 240. So
yeah, I mean, it's kind of one of those stories. I mean, again, the way we identify investments, and Sam kind of disclosed that, is we try to establish price targets, you know, kind of a position at which, a price at which we would overweight the stocks, position at which we want to be equal, where we want to trim out of it, where we want to get totally out of it. And this is a perfect example of a story working kind of exactly the way we expected it to, and yet there being another catalyst that we had no idea was there. And we do still own some Panera, but I guess was it Monday that we first started hearing the rumors of the potential buyout, that they were, you know, kind of listening to offer, so to speak, and we speculated a little bit about that on our End of the Day podcast. Quick plug, check it out on YouTube and all that good stuff. Hit subscribe, search Tusk Media. But we talked about that kind of at the End of the Day video and talked about who might acquire it. We talked about, you know, Starbucks. I think Yum Brands was being speculated. Domino's. Just kind of all over. And yesterday afternoon, kind of after market close, we got the news, which was basically that JAB is acquiring the company. They're going to take it to be privately held. They're going to keep management in place. But the big thing, you know, Sam just mentioned price target of kind of, you know, 252. You know, trimming some in the 240s, working its way up. The buyout price is at 315. Which again, not something we necessarily saw coming. We will take it, obviously, for the clients that still own it, and for Sam, who owns it personally. It's a nice thing to see. But Sam, what are your thoughts? How quickly can this deal get done? And you know, how surprised are you, just as somebody that has followed it, that not only was there a rumor of a deal, but hey, we got announced within 24 hours?
I did a lot of research on Panera, and not once did I see somebody say, yeah, this is a potential acquisition target. So I was shocked by it, but after learning more about JAB over this past week about who they are, you know, they acquired Green Mountain,
Krispy Kreme, and they want to be the Nestle, they say, of the coffee space.
Yeah. And so it makes sense for JAB. I think they're paying up for it, but if they think that the synergies between, like, I love Krispy Kreme, not a huge fan of their coffee. Love Panera, huge fan of their coffee. Put them together, synergies.
We're gonna get huge.
Quick,
We're gonna get huge.
But so looking, basically the information I have, and this is really coming from Ben, but it looks like JAB tends to, when they want to acquire somebody, like, they move. And so it's like, hey, there's a rumor, hey, we're in advanced talks, we're doing it. Like, just bam, 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 like 3 days in a row, as we kind of saw with Panera, and then with Krispy Kreme, it closed about a month later, I think.
Green Mountain, same
thing.
Green Mountain was a little bit longer, but still very quick. When you're talking about Green Mountain was a $14 billion acquisition for them, and they really got it done with, I mean, they're Austrian, but it's kind of that stereotypical German, Northern European efficiency. They get it done. It's a small family. I mean, it's family money that has this, so they can be very agile with what they want to do. And because they're taking it private, they don't have outside investors to talk to. Like, if Starbucks was to acquire Panera, I mean, that would be, you know, they'd have to hit targets, they'd have to hit the synergy targets. These guys can come in, you know, as long as they're making cash flow positive, they're in the black, it's accretive to them versus cash. And they can continue to try to build that empire that
That's
have ambitions to do.
That's a great point coming from a private equity stance. It is, I mean, I feel like a little bit easier because otherwise, if it had been Starbucks, then now you're trying to appease shareholders when you probably have some group who's not happy with the acquisition. And we were talking about yesterday how Panera has a bunch of franchises as well.
Yeah, that's what my next question was. How do you think this impacts the franchise?
Yeah, and so it's really interesting because we thought I was kind of concerned with Starbucks. I thought Starbucks would be the most logical acquirer of Panera, but they were going to have so many integration costs and challenges with all the franchises for Panera. JAB and private equity, I think it might be a little bit easier for them.
And you think about, the international expansion opportunities now. I mean, if they have any expertise about bringing that type of, repeatable process for a franchise model to Europe, for instance, on this aspect, they could have a good position in that space.
The last thing I've got, we don't know the exact timetable in terms of when this deal will definitively close, I guess. It's going to be an all-cash deal, though, from everything that we've read and heard and seen reported. Are there any threats and therefore any opportunities, I guess, to still be a buyer of Panera? And I'll say from my perspective, I don't really see anything. I think this is going to be something that closes pretty quickly. It's going to move through the system relatively fast. It's all cash. They're assuming Panera's dead. It seems like most of the wrinkles have kind of been ironed out for the most part. So I don't know that we're actually going to see the stock, which, kind of has peaked around 314 or so. Doesn't seem like it's going to come off of, it's hard to see it going below 310, kind of in the short term, and therefore there's not a lot of opportunities really to get in. But do you guys see any threats that could be looming before the deal closes?
You could probably take this.
I mean, I think there is potentially a financing risk for JAB if they want to fund it a little bit with debt as well, and how that's all going to work out. So that's a potential, and then just any huge macro events that happen between now and then. But we got some macro data out this morning, which was phenomenal. Yeah. Like the hard data is now confirming the soft data that we've been getting for the last 3 months. So it's difficult to see that actually taking place. Well, you could see if you wanted to be very bullish. So like a John Paulson who specializes in arbitraging deals like this. So if the price settles out at 313, 314, then someone like a Paulson might come in, say, worst case scenario. Obviously, he's losing. He's ignoring the huge case that JAB just blows up. Worst case scenario, I make $2. Best case, Starbucks comes in over the top in a month. I think that's pretty unlikely, though.
Right. So, Sam, any closing thoughts on Panera? You want to wrap it up there?
The only thing I was going to ask, and we didn't really talk about this, but with JAB saying that they want to be the next Nestle, do you think there's another likely target for them?
I think they want to continue. I mean, last year they did this. They bought Green Mountain, and they made that bid in December. Then just a few months later, they bought Krispy Kreme. Now a few months later, now they're buying. I guess almost a year later now they're buying Panera. I think they're going to continue to look for acquisitions. I think it's probably there's going to be a lot of articles written and a lot of time spent on Bloomberg speculating about who they're going to buy next.
Right.
They did that a ton last time with Dunkin' Donuts. Whether that happens again, picking that is going to be really the trick, though. And the problem is, like, you're going to see a lot of those premiums elevate, and you don't really actually know what's going to get bought. The thing that we know with JAB is when they move fast, and you're not going to get a chance to get it.
Do you think there may be a chance, when I look at the coffee space, it reminds me in some regards of almost kind of the microbrewery space where you've got major players, but it's also pretty fragmented. Right. You've got your Pete's Coffee and this and that, all these different brands that you'll find almost these regional coffee shops.
JAB owns that.
Yeah, so you kind of have this model established that will buy this, and I wonder if to some extent there's going to be kind of a rising tide for everybody in this space because of this, just thinking every ship gets elevated a little bit. Could be something to keep an eye on. Again, are we betting a whole lot on coffee? No, but we're drinking a bunch of it.
Drinking a lot,
Big fans of coffee. I think that's all we got. This is the Investing Podcast. Check us out on Twitter at Tusk Media LLC, Facebook.com/Tusk Media LLC, on YouTube, search Tusk Media. Seeking Alpha, hit subscribe, leave us comments and feedback, and we will try to reply and maybe even do videos relative to your questions. Y'all have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.